Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. We're going to be looking at the trends going into the prior halvings. So if you guys like the content, please subscribe to the channel, click the bell icon to turn your notifications on and like the video. And also make sure to check out the Telegram channel in the description below if you want to discuss these charts and join a growing community. We are about to reach 3,000 members. So one of the things I've spoken about before, the last time I probably spoke about this exact pattern, or I shouldn't even really call it a pattern because two data points certainly don't make a trend. But the last time I spoke about it was probably 3 or 4 months ago. But the main thing that I want to talk about is what happens going into the halving. So we've seen two halvings before. So what happened when we went into those halvings? Like, what was the price doing? Well, you can see that going into the halving in 2012, the price started holding the 20-week moving average as support. Okay, so you can see that, back in earlier in the year, so when we were in say January, February of 2012, we were kind of moving around the 20-week moving average, hadn't really confirmed it as support, but then we started confirming it as support sometime around late February, maybe early March of 2012. And then we were more or less above the 20-week moving average until we hit the halving. So during this first cycle, the time that we were above it, or let's say that the amount of time that we were above the 20-week moving average and holding it as support until we got into the halving was around 280 days, and during that time period, we saw a 184% increase in the price of Bitcoin. Okay, so this is just the first halving. All right, so let's go to the second one. So the second one is over here. So from when we held the 20-week moving average as support, so not when we shot above it, but from when we held it as support to when we got to the halving, it was around 87% over 161 days. So let's compare these two. So we have 184% over 280 days. Then we have 87% over 160 days. So you can see that the amount of time that we're holding the 20-week moving average as support is decreasing before we get to the halving, which is further evidence, in my opinion, that those cycles are getting pushed out further in time, because we need to hold that level as support for an extended period of time to confirm that the bull market has started. So again, 184% over 280 days versus 87% over 160 days. Currently, we're not really holding the 20-week moving average as support. We haven't really tested it yet. We've gone above it, but we haven't tested it. So it's likely that we can't even make this same type of move comparison because it's getting pushed out each cycle. But one of the things we can note is that going into this first halving, we were holding the 20-week moving average as support going into it. So we were either above it or holding it as support. Going into the second halving, we were above it going into the halving. So above this bullish trend line, which, as you can see, is a good indicator for a bull market and a great indicator for a bear market as resistance. So bull market support, bear market resistance. Again, here, going into the halving, we are getting above, we've already passed the 20-week moving average. Now the halving is coming up in a little less than 2 weeks, so it remains to be seen if we're going to hold this level. But historically speaking, from the last 2 times it occurred, which obviously does not a pattern make, we can see that clearly we were above it, and that we were seeing this bullish sentiment return to the market. Now, following the first halving, you can see that right after the first halving, we saw a fairly quick increase, and we've talked about this before, but I'll just show you. So the price at the halving the time it took to go up 100%, so a 2x on your investment, was around 70 days. Okay, after the second halving, the time to 2x your investment, so from this point here, up 100%, so it was 231 days. So we have, whoops, I did not mean to bring that up. This is from another video. So we have 231 days during the second cycle to get to a 2x versus 70 days during the first cycle to get to a 2x. So we would expect this trend to continue getting pushed further out. So the amount of time it would take to then say go up another 2x from where we are at the halving would, at the very least, if this trend were to continue, at the very least, it would take at least 231 days, probably maybe 300 or 400 days, so another year or so. And that's just what this basically tells us. If this were to continue, again, it's only 2 data points. It's not a lot to work with, but just assuming that we could take that to the bank in a sense, what could we expect? So let's say that the price going into the halving is around $8,800, because that's basically what the price is at the time that I'm making this video. So if we were to go up around 2x over, let's say around 450 days or so, so then that would put us getting up to around $17,000, $18,000 sometime in August of 2021. And this is one of the reasons why I've talked before that I think with the lengthening cycle view that we're likely not to get to our previous all-time high of $20,000 until later in 2021. Now, if it were a 4-year cycle, then we would definitely expect us to be at our prior all-time high by the first quarter of 2021 at the latest, because we know that we're seeing these diminishing returns and that it's going to take longer for Bitcoin to move up that price chart. So in order to do that, it needs to start really churning away, churning up the ladder sooner rather than later. So I would say quarter 1 of 2021 by the latest, if the 4-year cycle is true. I tend to believe more in the idea that the cycles are lengthening, and that the fourth quarter of 2022 would be the earliest we would see a new paradigm shift of, say, $100,000 per Bitcoin. I think more likely would be, say, summer of 2023. And then again, less likely would be 2024. So if you think about it in terms of like a probability distribution, the peak probability would probably be sometime in the middle of 2023 in terms of when we might expect a new say $100,000 Bitcoin, or somewhere around that range. It could be a little less than $100,000. Maybe it'll go all the way up to $200,000. I don't really know. I tend to think that maybe 120 to 140 is more or less the sweet spot there, but we'll see what happens. So this is just to give you an idea of going into the halving, what to expect in the long term. Are we expecting a move to $20,000 next week? No, we're not. We're not expecting that. None of the prior data, just from a mathematical point of view, would suggest that we're going to go up to $20,000 next week. A lot of people are saying that. I don't think it's going to happen. We've basically just gotten back to our bullish territory of being above the 20-week moving average. Now, for us to really get this cycle cooking, in a sense, like to really start to see this upward momentum, because in order for us to get to 6 figures, we first need to slowly build up to that. And in each cycle, you'll see that there's more or less 2 separate phases. You have the phase that it kind of moves up slower, so something like this, and then after it moves up slower, the angle of attack, I took some aerospace classes in undergrad, increases significantly. So you can see that we first need this phase, okay, where we are increasing rather methodically over probably a couple years. And then for the last, say, year or so, we would expect the move to accelerate. So essentially the return that we would be seeing over here would likely dwarf what we're seeing over here. So this is the same idea going into the current cycle as well. Um, so so if we were to look at this and let's say draw a trend line, then let's suppose that let's project that this is the time we're going to hold the 20-week moving average as support. I don't know if it's going to be held as support or not. I can say that during the last cycle, it took 2 tries to hold it as support, and currently we are on our 3rd try. So the first cycle it took 1 try. The first time we really got above it, we were able to hold it as support. In the second cycle, it took 2 tries because the first time we got above it, we did not hold it as support, and it was the second time that we held it. In the 3rd cycle, we are currently on our 3rd try. So we're currently on our 3rd time going above the 20-week. Now, can we hold it as support is the question. So let's assume that we can. If we can, and we see a similar move, we would expect to go up to our prior all-time high of, say, $20,000 sometime maybe by the end of 2021, maybe early 2022 if we haven't hit it by the end of 2021. So let's more or less say that this is something that we could foresee happening. Let's be a little bit more conservative and draw it out a little bit further. So let's say that we get to around $20,000 by the first quarter of 2022. So let's say we move up this trend line like that. From here, we would want to see this move accelerate going into the next year or so. So if we were to see another move up like this, then basically this is what I kind of see happening. So us going up into around August of 2023, somewhere around maybe $120,000 to $140,000. So something like that. Okay, if this makes sense. So let me delete some of this stuff so it becomes a little bit clearer what I'm drawing. But basically I'm thinking something like this, because you can also see that the first cycle, if we were to draw it on the first cycle, we had this slower move, and then after the slower move, we had a much steeper move. Okay, so again, in the second cycle, a slower move followed by a steeper move, and then we are going to expect the returns to diminish as well as the cycle to lengthen. So if this is the case, then we're going to expect to see this move, the move where we slowly trickle up, to take longer, but to still occur over the next year or two, and then to finally accelerate up to that 6-figure mark, probably sometime in 2023. So this is more or less what I see happening. Now remember, going into the halving during the first cycle, it instantly went up. Going into the second cycle, it actually first went down before going up. So that's why a lot of people were thinking, that the current move wouldn't happen. And because it was so bearish, I really don't like to project short-term behavior because I think it's often irrational. But it just seemed to me that people were so bearish, more bearish than I had really seen them be before, when approaching the 20-week moving average, because a lot of times when you approach that 20-week moving average, people really start to turn bullish, just like they were back over here in earlier 2020. But this time it seemed like everyone was bearish, so I'm not, to be completely honest, I'm not that surprised that we went above it, and even I made a live stream where I talked about this to some degree a couple days ago. So again, moving forward, what happens in the short term after the halving is largely irrelevant. It does not matter. Whether we go down to the 200-week moving average, whether we stay above the 20-week, it doesn't really matter. Now, one of the questions I get quite frequently is, well, if we do hold the 20-week moving average as support, well then wouldn't that suggest that we are on a 4-year cycle? And I would say no, it does not suggest that. And the reason is because you can see that we held the 20-week moving average as support more or less during this first market cycle. We were above it, but we peaked earlier in that cycle. During the second cycle, we held the 20-week moving average as support more frequently than we did in the first cycle. In the first cycle, we were mainly just above it. In this cycle, I would anticipate us hugging the 20-week moving average for a lot longer. So instead of seeing, these the moves where we are close to the 20-week stopping here and then ultimately accelerating, I would expect that to be just building up further support for at least another year or two before seeing this final move. So a lot of people will keep saying, I hope the price of Bitcoin drops back down to this key level of, say, $1,800 or $3,500. These people, again, will exist in every market cycle. We may drop down there, we may not, and a lot of these people say, man, I wish I could buy Bitcoin for $5,000 or for $6,000. And my response is, well, what were you doing last month? I mean, you had ample opportunity to purchase it. I even talked about the risk levels on my YouTube channel and talked about how the risk levels were nearly at their lows of the market cycle. So the question is, what were you waiting for? Because the idea is you're always going to wait for a lower price, and you should take this opportunity to consider that you don't want the same thing to happen at the peak, because the same people that always wait for a lower and lower price are going to be the same people that are going to continue to wait for a higher and higher price to sell later on. So please take this into consideration. Now, learn your lesson now so that you don't have to learn it later. Because if you learn it later, it's going to be a lot more painful. I think it's a lot more painful to watch your portfolio drop by 80 or 90% than it is to, say, miss the local bottom by a few percentage points, or in this case, a few $1,000s. But what's a few K among friends, guys? So if you guys like this content, again, subscribe to the channel. Check out the Telegram group in the description below. If you want to support the channel and get access to premium content, including a weekly report, as well as a private Telegram channel, access to a Google Sheets with updated risk metrics and under and overvaluation of the cryptocurrency market cap, then check out my Patreon channel, which you can find here. So the first tier would just be if you want to just subscribe to the newsletter. The second tier being if you want to subscribe to the newsletter and you also want access to the private Telegram chat room and access to the Google Sheets. And then the final one is for those people who want the one-on-one help and like one-on-one calls with me in helping to look at their portfolio and try to provide them insight into some of these data science aspects that a lot of people tend to overlook. So I hope this video has been informative. The halving is coming up soon. It's going to be a very exciting time because regardless of what the price does, you're going to be one of the few people, relatively speaking, that was invested in Bitcoin when the block rewards are at what they are today and not before they've halved. Because these halvings only occur approximately every 4 years. This is only the third one. Over the next 40 years, there's going to be approximately 10 more. So we're still, there's still going to be many of these to come, and you're going to be one of those lucky few that can say, you know what, I was purchasing Bitcoin in this area over here before we saw this move in the coming market cycle. So be the smart money. Don't worry about daily price moves. Be the smart money. Dynamically dollar cost average your buys based on whatever metric you want. I use the risk metric. You can check out the premium channel if you want access to that. And just stick to your guns. Don't sway. I don't think it's wise to capitulate if you see something like what happened in March. If you see something like that happen again, there were a lot of people that capitulated there, and just looking at the data, it was mostly not people who had been holding Bitcoin a long time. It was mostly short-term holders that were capitulating. And if you look at the price now and just a month and a half ago, the price has actually stayed the same more or less. It's just that this was Bitcoin's way of saying, you know what, I'm gonna basically shake out these people that are gonna have these. I know it's a little bit cliche to say, but the weak hands in a sense. I'm just gonna shake out these people that can't see the longer term picture of Bitcoin. and are only interested in these short-term gains and short-term losses and scalping and whatnot. We're going to shake these people out and then continue on our path that we've been on, and continue on the path of the primary regression band. So just nothing has changed. We're on track. We're expecting to continue to stay on track and ultimately see a speculative bubble peak somewhere over here around $100,000 out in the 2023 timeframe, plus or minus 6 to 8 months. So I hope this video has been informative for everyone. Please subscribe to the channel, check out Telegram, check out Patreon if you want to join that. I also accept cryptocurrency payments, which you can find information for in the description below. And I will talk to you guys next time. Bye.